All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I made the comment this morning to one of you when the market was kind of taking off. I made the comment that as far as reacting to the upside in this market today, it really kind of feels the same way as what reacting to the downside of the market yesterday would be. And overall, there's just not a lot of technical change that is happening. We're not seeing it in the metrics. We're not seeing it in the technicals of many stocks, even though some things are bouncing. But we're not seeing a mass change here in terms of the overall market conditions and what's going on out there. And you can even see that with the SPY, as the SPY is still below the 7-day moving average and still within the same range of the last 3 days. So we're not really seeing any sort of material move that is different from what this market has been. Now, some of the recent outperformers, like we have discussed on, the Amazons of the world, the Walmarts of the world, the CSXs of the world, some of the more recent outperformers doing pretty well here today and pushing on higher here today. And if the market stays consolidating, I do expect that these stocks will continue to charge on higher. But for the most part, most stocks remain in kind of consolidation. Here's JP Morgan. Can we say, hey, you know what? JP Morgan's a screaming buy right here because this little yeah, it's a little difficult, isn't it? Right? There's no real material change here. In fact, if you want to go and kind of compare what this market looks like, we don't have to go back too far. And I'm not saying we're going to have the same result, okay? But take a look back here in January. Up, 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 and away. There we go. Yep, a few dip days, and market keeps on going. Okay, here's July, up, 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 and away. All right, a few dip days. Then we get this gap below the 7. Okay, we had that on Friday, right? Then we get this kind of gap up and sell day, and then come off the lows. All right. We had that yesterday. Didn't come as far off the lows as we did back here in January. And then we have this next day that kind of goes on up, and we kind of see the market near the high end of that range. Sells off a little bit into the close. No real material change right there, right? We're not changing above the 7. We're not all of a sudden brand new, starting a new trend or anything like that. The risk factors different. The risk factors have changed. Oh, yeah, a little bit of extra sell pressure coming in. You take a look at the last 2 days here in this market that have been on the downside. The volumes have been elevated, and you look at the volume today, and we still have 2.5 hours to go, so it's not final here, but volume's not going to come up unless we sell off hard into the close. Volumes are not going to come up to where they've been the last 2 days. Remember, yesterday was a Monday, which is typically the lowest volume day of the week. So we have this type of action out there, and essentially, to me, what's it mean? It means that, look, if you're looking to get short and you want to bet hard against this market, yesterday's lows is the spot to eye. We got below yesterday's lows. We moved below yesterday's lows. We break yesterday's lows. Time to sell. The August route is on. Okay, and that's what the action means. I would not be surprised to see the market just kind of bleed on up, bleed on up, bleed on up, right? But if playing this market higher, it's one of those where you have to respect yesterday's lows. Yesterday's lows break, bye-bye. It could get ugly very, very fast. And I think that's what we've seen built in from Friday, yesterday, and today's action here overall. And so as far as kind of reacting to the downside in a major way, I don't think it's I don't think it's still there yet. IWM was down over $1 yesterday. It was like, oh, is it breaking down? No, when we talked about the dreaded consolidation word, today pushing on up. Oh, is it ready to break out? Well, you know what? If it's down $1 tomorrow, it's going to be what? Consolidation. And I don't think there's any news catalyst or volume catalyst of great enough strength out there right now to suggest that, oh, okay, you know what, it's off and ready to fly. If we get one of those catalysts, it could easily do it. And if you're bullish and you want to buy, I think, you know, really with even something like IWM, you put a stop on today's open price if you want to be pretty tight on it, and it's a decent setup, right? But when it comes to a challenge trade, I'm looking for a good setup with solid risk reward and with a higher probability, right? And as I go out there and look at things, I just don't think there's many options out there in that regard where I go, okay, high probability of movement now plus a decent risk reward on the options. My favorite setup from a chart standpoint out there today is Chipotle Mexican Grill. And I mentioned this one this morning, and it sold off the last 2 days on light volume. Today, the volume's already greater than it was the last 2 days, okay? And it's up about $10, and I've been watching the options on it. If you go and you look at the options on Chipotle, the spreads are pretty high, and my risk reward isn't all that great. Meaning, if I come in fact, let me pull them up. If I come in and I just look at the 7th of January options on Chipotle, and I come buy something like a 485, right? Or excuse me, a 495, excuse me. I'll be paying somewhere around $12.50 to $13. You can see there's not a lot of volume, not a lot of open interest. So these spreads are going to be very high in the morning, very high in the afternoon, okay? And then what type of move do I need to double my money? Well, I need about a $20 to $25 move to double my money, depending on how fast that happens, right? Can it move $20 to $25? Well, sure it can. I mean, it just had from $4.30 up to $4.90, a $60 run in a matter of 2 weeks, right? So it can certainly move $25 higher. I'm looking at this to push into the 500 to 510 area. I think there's going to be a little bit more short covering above 500 that'll pop it into the 510 area. So it's not a terrible risk reward here on it. And, you know, it's one, though, where the option spreads are just a little higher than what I'd like to see, you know, to get into for the first challenge trade of a new challenge. That said, if Chipotle decides to pull back $2 to $3 into the close, I will be taking a very close look at this, and this may be something that I buy, you know, even with 10, 15 minutes left to go in the market today. You know, and because of the nature of how Chipotle trades, I would not hesitate to pull the trigger on it if we see that scenario, and I like the fact that other things are, you know, kind of holding up. So that is the trade that I like the most that's out there on the board. It's the one that it has, to me, the best chart in terms of probability of direction. It's, yes, is it market weighted a little bit? Sure, you know, everything has a little bit of market weight, but it's not like Chipotle and the market themselves are correlated in any kind of major way. You know, Chipotle is not a huge indexed stock, so, you know, it marches to the beat of its own drum, you know, more than something like a Honeywell or a Caterpillar or UPS or something of that nature. So my favorite trade on the board, you know, here today is Chipotle, and we'll be looking to enter it here into the close of the market today. Now, another sector that has caught my eye here today, and this is one that you know, we talked about on earnings, and we've talked about even before earnings how the sector is set up, and that is this credit card sector. And I'm not talking about Visa, MasterCard. Visa and MasterCard are credit card companies that make money per transaction. So every time, you know, my wife decides to go out to the store with my daughter and they swipe the card, every time that happens, there's a fee that the merchant pays, and they pay it directly to Visa and MasterCard. Visa and MasterCard make money on those swipes, transaction fees. There's another type of credit card company like Capital One, American Express, and Discover Financial, where they don't just make money on the swipes. In fact, you can have a Capital One Visa card where Visa's making the money on the swipe. But they also hold the debt. they hold the cash, right? With a Visa and MasterCard, it's generally linked to your bank account or to a bank that's holding on to the debt and everything else there. With these others, Capital One, American Express, Discover Financial, to a different degree, they are holding on to some of the debt. And here's the thing about these stocks. Take a look at the consolidation that has been in them. Here's Discover. This has been a 8-month consolidation in this stock. And if we come into a weekly view here on it, you can see that it's an 8-month consolidation after a big rip. Well, we had a big rip in 2016 and about an 8-month consolidation throughout January to August of last year before a big rip into year end. Here we have what you could call even a better, more bullish consolidation, and starting with its breakout, trying its breakout. Not only do we have that with Capital One, but we have it with American Express, and we've talked about American Express a number of times, but this kind of long-term consolidation and breaking on out here, okay, and trying for that breakout. We've looked at the fundamentals. The fundamentals are not stretched by any stretch of the imagination. And then you look at Discover. Okay, so we have Capital One, Discover. They look very similar, right? American Express, a little bit stronger in terms of trend. But all three of these here today in a very interesting spot, in a very interesting position, very strong moves. And, ones where I'm looking at saying, okay, are we talking about, some breakout action, following through and finally starting to continue with these names. Now, my concern, it has nothing to do with if they're gonna break out. My concern has to do with, okay, does this market take a leg down in August, which sends American Express down to 100 or 99 before that breakout move? And to me, that is the big question. And so if I go get into it, something like American Express, I have to get out if it breaks today's lows. I can't take that risk beyond today's lows on this type of a chart setup, because if we're talking about a pullback in August, we are talking about something that is probably going to be a 3 to 4 week type of thing. So unless I'm going to buy an October, November, December type option on American Express, it doesn't I can't suffer a consolidation very easily. So I like the price action. I like this group and the sector, and I like what it's doing today. It's not doing it on volume, right? And that's my one concern. It's not really doing it on volume, and so I'm would rather pick this up on a low volume pullback day tomorrow or something like that. So they're triggering here for me. They're in nice spots and telling me, hey, chances are good that we go higher, but I do think that I can pick them up for a little bit cheaper than what they're sitting at right here at the present. So I'll be looking at Chipotle into the close. I'll be looking at these credit cards here into tomorrow, and then looking at the day's lows today to hold. And if they don't, I'll be looking at just some put activity out there, whether it be with the SPY, whether it be with the IWM, whether it be with VIX calls, whether it be with even an individual stock like a Boeing, or something of that nature. But that's what I'm looking at here for the challenge today. And, as I kind of look at how things are ticking along and how things are moving, a lot of the things that I would like to be a buyer of, they're just not ready yet. JP Morgan's just not ready yet. Caterpillar, just not ready yet. In fact, it's more of a sell than a buy in terms of chart components that are on it today. AT&T, I'd like to be a buyer of, but man, I need a little more pullback or a better sign that it's ready to move. But this is one I think goes up to 34, and I'd like to be on board to play it, but just not there yet. We have Pepsi coming off the lower Bollinger Band a little bit, but we're not really the type of action I want to see on the lower band. I want to see volumes increase along the lower band, and we're not seeing that happen. We had the same thing happen with Boeing. Came down to the lower band, but volumes didn't really increase down here at the lower band. And generally, if something's going to bounce off the lower band, like back here in February, we're going to see those volumes increase in a nice way that would suggest, hey, ready to move on higher here. Okay, MarketVibe sits at a 6 right now, so it's still bullish, but it may tick neutral before the end of the day here today. That is one of the risks there on it. As far as its signal, I don't think that means a heck of a whole lot different than what the market recently has been. And it's just one with a lot of differentiation, a lot of consolidation, and, one that I do think continues that way and is susceptible in the month of August to a spark. And we just know that over the course of the summer, especially after July rallies, the market's vulnerable to a spark. And, we have the Turkish situation. I don't think in and of itself that's a big enough spark. I think it's more of an excuse than a spark. But if there's anything added to that, I don't think it has to be a big spark to really ignite, some heavier selling out there in the marketplace. So as I go into the close here today with the challenge, that's what I'm looking at, and what I'm looking at setting up and getting into, whether it be this afternoon or, tomorrow, with what the price action is here today. I'd love to go buy some Valero for the 100K challenge. I still have a little Valero hung over from last week. I still think this breaks higher. It's been in this consolidation. The downside risk of, in the short term has increased, in my opinion. But this is still one that I think if there's time, if you have a trade with plenty of time, you're going to be looking at this trading in the 122, 124, 126 area before too long. But like I mentioned yesterday, I need to see this thing break above about 117 to say, oh, the chase is on, and here we go. And, if we get that, I will not hesitate to go and jump after that. So I like the way some things have moved here today and yesterday and how the mechanics have kind of come into some of these charts. I think there's a lot more trade opportunity setting up than what there was at all last week. And, I've showed you some of my favorite spots here and what I'm looking at and, what I will be looking at as we go into tomorrow morning. There are no KD signals. There are no trend rider signals out there. There are some things like Briggs and Stratton, BGG that are piercing the upper band on volume here today. But BGG and the trend rider don't have a great track record. In fact, most of the upside pierces, you sell them, you don't buy them, even on volume with Briggs and Stratton. But some of that has to do with just the way that it moves. Something like a CLI here today, big volume, pierce of the upper band, has a decent track record, but very thinly traded here overall. But you'll notice all of these very, very small cap, heck, even a pharma here with IDRA here today with that, but nothing that's qualifying here as a KD signal, or excuse me, as a trend rider signal on the day. This one's very interesting to me, Pacific Premier Bank Corp. We see a lot of the regional banks. In fact, as I went through my scans this morning, a lot of the regional banks popping up on them. Key Bank on a fresh move back above the 7. Zion here popping up on my scan with a fresh move back above the 7. So some really interesting action in these regionals here today as they are outperforming. They are absolutely, you look at the regional banks, they're up 1.7% today. You look at the XLF, which has the bigger banks, it's up 0.9. So the regionals are strongly outperforming the big banks here today, which tells you what? Which tells you the market still has some concerns about Turkey. Because that's what sparked some of the selling in the banks. That sparked the drop on Friday was the European Central Bank basically saying that they are worried about some contagion in the banking with a few banks. I don't think it was all that big a deal, but the market obviously reacted accordingly, as it has in the past. But you can see that while the U.S. by the XLF has not hit a new high, the KRE is breaking above Friday's high. So it tells you where investors are putting their money. They're not too worried about the overall banking system. They're just a little more worried about some of the bigger banks and their exposure to Turkey. But, something like Zions Bank, there's no exposure to Turkey. Something like KeyBank, there's no exposure to Turkey. And in fact, in terms of the regional banks and just prettiness of charts, Zions Bank is, it's one of my faves. It's one of the nicer ones out there, and the options are actually halfway decent. They're not fabulous, but they're halfway decent. I don't really want to buy an option for 38 days yet, but anyway, that's it's a really easy setup, really easy play. Off the 200-day moving average here. The only thing you don't have is big upside volume, but you don't necessarily need it. You already had the big upside volume right here. The volume today is going to be greater than the last 2 days of selling. And so chances of this, pushing up into 55, 56, if you're looking for bank exposure, for as much as I like JP Morgan, I have to admit that the charts on the smaller regionals are significantly better in the short term than on the larger names. And generally what we'll see is, the smaller names kind of start to rally. Then we'll see Bank of America start to outperform as it kind of trades a little more like a regional. And then we'll start to see the JPs and the Goldmans and the others start to pick up, here after that. Alrighty, so anyway, those are some of the things that I'm seeing here today, some of the things we're watching here today. Tomorrow, we're going to kick off our first August training session with technical analysis. We'll have more information on that tomorrow. We'll go through an outline of everything that we're going to look at during the month of August. Absolutely looking forward to that, so we will kick that into gear tomorrow. And then, hopefully either this afternoon or tomorrow morning, have a trade on the board and get this challenge rolling. Have yourselves a great one, and we'll talk to you later. Take care.